We've already hit a record for the amount of money raised in IPOs and SPACs this year. What's that mean? Is that a good sign, a bad sign? I've got some perspective coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Tons of money going into IPOs, initial public offerings, and SPACs, special purpose acquisition companies. Guys, take a look at this, which is just showing the amount of IPOs and SPACs over the past, 8-9 years. In 2013, there was $1 billion raised. 2014, $2 billion, $4 billion, $3 billion, then 11, 9, 13. Last year, 2020, $83 billion raised. Guys, already year to date, as of July 1, this is 6 months into the year. We're halfway through the year. We've already surpassed last year's unbelievable record. We're at $111 billion IPO money and SPAC money raised. That is unbelievable. Taking a closer look at what's happened in the IPO space, yes, just year to date, this record was actually hit before July 1. So inside of the first 6 months, we've already had a record amount of money raised in IPOs. Yes, there's inflation and all sorts of stuff, so you'd expect that records would continue to be set. But the simple fact that we've already hit a record in IPOs raised for a year in June, right, of this year, with still 6.5 months remaining, that's incredible. If we were to pan out and look at how that compares, take a look at this chart here, looking at IPOs for, recently, but going back 20 some years. What stands out to you, right? Look at how many IPOs we've had in 2020, and I already told you 2021, which isn't on that graph, is already higher. Look at how many we had in 2020, and is that similar to any of the years in the past 20 years? Yeah, that's right, the tech bubble. Okay, so what does this all mean? I'm gonna get there, but I wanna dive a little bit deeper into SPACs. Now take a look at SPACs. Now what are SPACs? This is a special purpose acquisition company. I've done a few videos explaining what they are, but it's basically a blank check company. A sponsor, typically a celebrity, hedge fund manager, financial celebrity, some sort of personality says, hey, I want to buy a business, and maybe I want it to do these sorts of things, or maybe in this sort of space. I have no idea what the business is. I don't have a business right now. There's no profits, there's no revenue, there's no nothing, but I'd like to do something. Can I have some money? I mean, that's basically what they do, and they go out and they raise a bunch of money, and once they've got that money, they then say, all right, what do I want to buy? And then they use that money to buy something. And so that used to be like the last resort way, a very speculative, sort of frowned upon way to buy a business or take a business public. And now this is like mainstream, okay? So take a look. Last year, the amount of money raised in SPACs, the amount of SPACs created was just outrageously high. I mean, blew the doors off of any other record. And as we've already talked about on this channel before, while that pace has slowed recently, because the SPACs have performed terribly, by the way, while the pace has slowed, still through 6 months, we are at a record level right now. For the whole year, we've already surpassed last year's record, which again was just an unbelievable feat. So record amount of IPOs raised already year to date, surpassing any other year. Record amount of SPACs raised year to date, surpassing any other year, and last year blew the doors off of the previous record. So what does this all mean? Well, I have three. I mean, it seems like it's one of three things, okay? Number one, there's just tremendous opportunities out there. And I'm trying to say that without too much bias. Maybe there is. Maybe there is just an abundance of opportunities, of investment opportunities out there, that things are so good, things look so attractive that all we need are resources, and we can go create a service, add some value, improve things out there, and we're just needing the money, and therefore, with all the money that's out there, okay, there's so many opportunities, let's go get it, okay? I think that's possible, okay? That there's just a lot of opportunity, and that's why we're seeing so many IPOs. Possible, okay? Second is this is evidence that there's so much money sloshing around the economy. And I would give a little credence to this because we've talked about the wealth gap or the income inequality gap, and where the top 1%, top 10%, their wealth has risen significantly compared to the bottom 50% or we've looked at those charts before. And if there's been so much money printed and a lot of that money has been filtered into financial assets, yeah, that helps. That doesn't help the average Joe. That helps the top 1%, the top 10%. And I'm not trying to make this into a victimization or whatever. I'm just saying it's possible that there's so much money out there that some of that money is being funneled into initial public offerings and SPACs. I think that's very possible. If that is the case, then watch out for inflation. Everyone's been talking about how inflation's crazy, inflation's gonna go crazy, and then over the past month it's been, no, there's not gonna be any inflation, everything's fine. This could be some evidence that, nope, there is so much money sloshing around out there, we don't even know what to do with it. Let's just go after any opportunity. Any Joe Schmo says, hey, I'm gonna start something. Can you give me some money and I'll buy something for you? SPACs, i.e., that's how they work. If there's an overabundance of money out there, too much money chasing too few opportunities, then that could be a reason for this just off the charts start to IPOs and SPACs. And if that's the case, again, watch out for inflation, because the same thing would mean, hey, there's too much money chasing after too few goods and services, therefore prices are going to be bid up. So that's the second possibility. The third possibility I think is also extremely likely, and it's just rampant speculation. You can see that with the multi-billion-dollar value of a near bankrupt AMC movie theater company, which, hey, they might have just found their lottery ticket over the past couple of months, where they've, their price is so high, they've issued more shares, they've raised more money. They might be able to dig themselves out of this hole, but there's no question it's just been speculation that has driven that price up from a couple $1 billion to what was it, Ty? $30 billion. This is a company that hasn't made money in a long time. Also, cryptocurrencies, and we've talked about that a lot. I'm not poo-pooing cryptocurrencies in general. Bitcoin, I think a few of them have potential, okay? But when you look at all of the cryptos out there, and that we now have more cryptocurrencies than we do US dollars, to me that feels like it's evidence of rampant speculation, that you could just create a cryptocurrency, some sort of digital coin out of thin air, right? Or immediately. Any one of us could do that right now. And so to me, that's a sign of rampant speculation. You could also look at the multiples. I mean, this certainly, to me, this is probably the more likely reason we're seeing IPOs go, be at a record is, wow, you're willing to pay that level of multiple for my business? Sure. I'll raise some money at that. I'll issue some shares. I'll take my company public. So these multiples are so high, the valuations are so high, it's so attractive. How could you not go and list and sell shares in the open market? So to me, rampant speculation. All right, what do you do with that? Now, it's very possible there's an abundance of opportunities, and we all know that there's great opportunities out there. Just go look. I mean, lasting companies, how many companies were established in 1928, 1929 during the Great Recession, right? So with this great technological change, with this great change in our economy, global economy, I'm sure there's lots of innovation, lots of great opportunities happening. But I do scratch my head and wonder, well, are there 2, 3, 4, 5 times the amount of opportunities today than there were last year or 2 years ago or 3 years ago? Or think about that chart of from $1 billion in IPOs and SPACs in 2013 to now $111 billion just year to date through 6 months. is there 100 times more opportunities today than there were 9 years ago, 8 years ago? To me, likely has to do with way too much money printed. We don't even know what to do with it. That's what's going on in the reverse repo market. People don't even know what to do with this money. Banks don't even know what to do with this money. So reverse repo coming in, giving you some basis points to suck that money out of the financial system temporarily. But also rampant speculation. It's as if investors believe, I'll just say there's a high level of complacency. Okay, and there's lots of other charts we could go into there. So what does that mean to you? Number one, I'd be cautious about jumping into SPACs and IPOs. SPACs, the performance has just been abysmal. It's been disappointing. Now, if this is play money, or you have the ability to get in on something, a cause or a company you really care deeply about and are tracking, okay, I'm open to that. But at the same time, be careful of jumping in on these, because second, I personally think this is overabundance of money and rampant speculation. Could this all just kind of smooth itself out and work itself out? Absolutely. Could this also rampant speculation exist for several more years? Absolutely. However, if you just look at averages, we are at extremely high and extremely complacent levels. And so will that last 6 months? Will it last 6 years? I don't know. But just be cautious. Therefore, for you, make sure you've got a strong, solid financial situation and that you've got a prudent investment philosophy that works during great investment times like now and challenging investment times and high volatility like we could see, like we saw last year, and we could see in the near future. So what's your interpretation of this? Did I miss anything? Leave comments below. Work with your CFP. Make sure you're applying this information into your investment philosophy, your overall financial plan. You don't have a CFP, you can contact one on my team. Find us online, corehorn.com. That's Corehorn with a K, wisemoneyshow.com. You can find us there as well, or send us an email, info@corehorn.com. All right, there you have it. Go out and take your next wise step in your financial life.